With the release of the 13F filings, we get a very close look into super investors' portfolios, and one of those investors is none other than Bill Ackman. And one of Bill Ackman's most recent buys has been none other than Nike. And here in this most recent quarter, he actually quadrupled his position. So today we're going to take a look at that position that Bill Ackman is building out and what exactly is going on with Nike that has driven this stock down so much over the last couple of years. And if you enjoy this type of content, make sure to drop a like down below and subscribe for more videos like this one. Let's start by taking a look at Nike's stock price, because over the last 6 months, the stock is down over 20%. Its largest drop happened at the end of June when the company announced very poor earnings, which sent the stock down by almost 20% in a single trading day. And things only really get worse as we zoom out, because year to date, this stock is down over 30%. And even if you look back over the last 5 years, Nike's stock is still down by almost 22%. And from its all-time highs achieved back in 2021 of around $175, the stock has actually fallen by almost 60%. And clearly, as Bill Ackman sees the stock falling, he likes it even more and more as he is adding to his position. Bill Ackman actually manages a firm known as Pershing Square, and he added to 2 major positions in the portfolio, one being Brookfield Corporation and the other being Nike. I really like these charts shown on stockcircle.com because you get a very accurate representation of how these investors are actually building out their positions over time. Here specifically, we are looking at Bill Ackman's position in Nike. We could see that he started buying into the position during the second quarter of this year, where he bought around 3 million shares. However, in this more recent quarter, he added an additional 13 million shares to his position. So clearly, Bill Ackman added these additional 13 million shares after the poor earnings announcement at the end of June. And it's very likely that he added those shares around that $70 to $75 range, which is currently where the stock is trading at. But since that time, Nike has actually announced additional earnings. They came through and announced their Q1 for their fiscal year earnings on October 1st. And they reported an EPS number of 70 cents, which actually beat analyst expectations. They were expecting a very low number of 53 cents. So they beat by almost 32%. They also came through with a revenue of $11.59 billion, which missed analyst expectations by around 0.5%. And honestly, these numbers are probably even worse than the June quarter, because in terms of their revenue of, again, $11.6 billion, that is down 10% year over year. Their Nike direct revenues, which has been a huge focus of the company over the last 3 years, we're sitting at $4.7 billion, which is down 13% year over year. Wholesale revenues, which they're trying to shift back to wholesale, we'll get into this a little later in the video, came through at $6.4 billion, down 8% year over year. And then their diluted earnings per share came in at that 70 cents, which was down 26% year over year. The only positive thing that they came through with was gross margin did increase by 120 basis points to 45.4%. And revenues declining by 10% year over year is exactly what investors do not want to see. They were concerned back when the company was growing by less than 1% on their top line. And now in the last 2 quarters, they saw a decrease by around 2% year over year last quarter and 10% year over year this quarter. This is very concerning for the company. We could see how flat the revenues have been over the last couple of years, and it's very concerning to see this actually reverting and headed in the wrong direction. And you can dive a little bit deeper into Nike's revenue split to start to see where the cracks are coming through. I've seen a number of people talk about China being a problem for Nike, and it's definitely not helping, as they have seen their footwear business in China decrease 3% year over year and the apparel business decrease 10% year over year. However, the big standout areas where Nike is getting hurt the most is definitely in North America, as well as Europe, the Middle East, and Africa. In both of these regions, they are seeing double-digit declines in footwear as well as apparel. In North America, footwear is down 14% year over year, while apparel is down 10% year over year. In Europe, the Middle East, and Africa, footwear is down 14% year over year, and apparel is down 13% year over year. And there's 2 main reasons why Nike is seeing these issues across North America as well as Europe. The first being competition. Their 2 main competitors have been on On Holding and Hoka. These two companies have came in and actually stole market away from big companies like Nike and Adidas. Whether it's online or in stores, they have captured the market and are starting to pull customers away from these larger players, especially when it comes to the running shoe market. These two players have came in during the pandemic when a lot of people are picking up the habit of running and offering them shoes that really took, again, market away from Nike and Adidas. And you might ask yourself, how exactly has Nike let this happen, and why would they let this happen? Why would they let competitors come in and actually steal shelf space out of these wholesale retailers? A lot of that has to do with a shift in Nike's strategy. They began selling a lot more and focusing a lot more on their storefront known as Nike Direct, which is basically them selling their products directly to consumers through their online website. And this was an excellent strategy during the pandemic when everyone was looking to buy things online. However, as we have shifted back to more in-person purchases, that has caused a major problem for Nike, because these wholesale retailers that once only held companies like Reebok, Nike, and Adidas now started branching out and trying to fill the rest of their shelf space with some of these other companies and other brands. And as people have gone back out into stores, they have started shopping more in person. They're looking at these new selections in companies like Dick's, Foot Locker, wherever you may buy your shoes or apparel, and seeing these other companies and considering purchasing from them. And that's where Nike has really lost out. In a lot of these retailers that they once held so much shelf space, they now hold significantly less. Because Nike Direct is a very profitable business, we haven't yet seen this take a huge effect on their EPS numbers. Their trailing 12-month EPS back in 2021 was sitting around $3.56. It's decreased slightly over time to around $3.49 for the trailing 12-month period currently. The big concern right now for investors is there isn't a clear picture moving forward around how Nike is going to turn the business around. Investors are concerned about how long this could potentially take. We are just now seeing the new CEO take hold. He's only been in office for around a month or so it's gonna be a question mark over the next few months of what the new CEO is going to do and how things are going to play out over time. But right now it appears that analysts are actually expecting things to turn around in 2026. They have 5% revenue growth in 2026. This year in 2025, which for the company just started, they're expecting a decrease in revenue of around 7.5%. So that is still very concerning. I think that 2026, it's probably hard to say whether this is actually going to play out this way. It's going to depend a lot on what the new CEO comes in and does for the company and if those things actually work out over time. For earnings, analysts have Nike doing $2.80 in 2025. That's down almost $1 from a year prior when they put up $3.73. And they don't even have them hitting that number in 2026 because the average EPS estimate for that year is only $3.27. But despite that, analysts are still fairly bullish on the company. The current price again is around $73.36. The average price target though is $91.46 with a high price target of $120 and a low price target of $57. And because analysts actually have their earnings falling over the next couple of years, the forward PE ratio is actually higher than what it currently is on a trailing basis. So the forward PE is currently sitting at a 26.88, while the trailing PE ratio is sitting at a 21.18. I can't quite buy Nike yet. I think that there is a world where I could buy into this stock, but I just think right now that over the next couple of quarters, we could see competition come in even more fierce, and it could not only affect their top line, how we have seen over the last couple of quarters, but it could start affecting their bottom line as well. And that could be another leg down for the stock. And if that were to happen, I'd have to reevaluate and see what happens with their valuation, with what I think the stock is going to do in the future, and with the vision that the new CEO is going to bring for the company. But right now, I just think there's too many question marks for Nike. But as I always say, don't buy a company just because I talked about it here on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what do pilgrims use to bake cookies? Check the comments down below for the answer. Thanks for watching.